All right, y'all, we are live on this beautiful Wednesday afternoon. Blessings to everybody in the name of Jesus, Yeshua, the Messiah. Even if you are not religious, I still pray you and your family are super blessed over on ByBit. Shout out to everybody in the chat. Today is the day, guys. Jerome Powell, our good friend, is going to come out of the closet and give us a fresh take on the markets. And as we know, this morning inflation was down. People were expecting 0.3% inflation. It was only 0.2. Sheesh. Amazing. And as you can see, the markets have given us a big pump right from the secret Casper Crew level setup given in advance in the Casper Crew VIP Discord, from the level that says look for a long here with bull divs. And in fact, we have gotten a long from this level. Very juicy trade indeed, guys. All right, we are in longs from the secret level, the secret Casper Crew level. Shout out to the Casper Crew, the best trading community in the world. JasonCasperTrading.com to join the community. Also have to give a major shout out to everybody in the chat. Okay, first of all, a major shout out to the Hustle Sauce. All right, he says showing no. Shout out to Love Maddie Locks, who says amen. Shout out to Juju, who says Juju. A huge shout out to Crypto Coons holding it down with the wrench, and a major shout out to Fit Genius 618. The juice from the level was insane. Man, oh man. The juice from that level was absolutely insane, guys. You know, the only regret I have is that I took profit too early. You know, I was looking for a little scalperoni from this, but we're gonna get into what's happening, man, because things are getting absolutely nuts. And as you know, today is the day that things are gonna. If you thought things were crazy this morning, all right, you just wait. You just wait. All right, shout out to Vince R7. Shout out to Divine Hood. Much love to you, my man. Divine Hood says, in other words, inflation is still rising every month, even after the most aggressive rate cycle in history. This economy is doomed. Absolutely, absolutely. Divine Hood is right. The economy is doomed, guys. All right, but it doesn't mean we can't make a little bread on the side trading the volatility up in here. All right. Shout out to Inglesi. Does anyone know? I don't know about that. Shout out to Cody. Shout out to XYNVX. And JTube, he took too much. Yeah, I took too much as well. Yeah, look at this, man. I took some profits mad early here. And then, of course, I took profits up at the Golden Pocket. But, yeah, you know, I didn't know if we were going to get a big pump like that. I figured better safe than sorry. I actually took this trade. No joke, I was at a state park with my family. We were on a little hike. You know, we went swimming in a lake, enjoying the day. All of a sudden I get an alert that we're at the secret Casper Crew level. I look at market Cipher B, and I mean, what do I see on market Cipher B? But let's remove replay mode. You know, let's put on market Cipher B. Let's go to the 1 hour time frame here. When we came down to that level, I took a look at market Cipher B, and all I could see was uneven butt cheeks as far as the eye could see, guys. I mean, would you look at these dang bullish divergences on the chart right here. All right, we got the left juicy cheek and the right skinny cheek right here. We could change the opacity just a little bit. Would you look at that? And then the 12-minute time frame was just looking absolutely gorgeous and beautiful as the money flow was getting higher over time as we came down to the level. Money flow getting higher, momentum waves getting higher, and now here we are. Jerome Powell's about to speak, and things are getting juicy. All right. Also, shout out to all the sponsors of the channel. First of all, shout out to Market Cipher, shout out to CryptoFace, shout out to ByBit, shout out to BLOFIN. BLOFIN is a KYC free exchange, and if you sign up to BLOFIN, this is their offer for you. If you sign up with Jason Casper's link in the description, this is their offer for you, all right? I'm also trading on ZOOMEX, which is a KYC-free exchange as well. And I'm trading on MEXC, which is the best deal on fees literally ever. Still holding the juicy swing long trade on MEXC from the setup we gave in the Casper crew. All right, shout out to the Casper crew. Shout out to all the sponsors of the channel, as well as Apex. If you want to become a funded trader, guys, this is the platform that I'm officially partnered with, that the Casper crew is partnered with. So if you know how to trade, but you need capital, this is the official Jason Casper partnership that we have going on right here. All right, all this stuff, links in the description. So let's get right into the analysis here, guys, because I'm telling you, things are about to get absolutely insane right now. All right, huge shout out to our super chat, caffeine injected. God bless you, Jason and Bitcoin. May God bless everybody in Jesus' name. Even if you are not religious, may you be very blessed. All right, so let's talk about what has happened here. We were looking at this on Monday. We were talking about the fact that Bitcoin had come up to this very important area of resistance, the highest weekly close ever. And every single time we come up to that level, we get rejected. All right, now rejection is nothing new for your boy Jay Casper. Every single girl I've ever asked out on a date has rejected me. I always somehow end up in the friend zone. I don't know how this is possible. But no female has ever said yes to any romantic inquiry of mine. So the highest weekly ever close, this is a girl. All right, this is a hot girl who rejects. All right, this is the HGWR level. The hot girl who rejects. Every single time we come to this level, we get a harsh rejection. Now, we were watching this happen, and we were saying, look, you know, overall, this could be a very bullish kind of head and shouldery pattern, and we don't really know where that right shoulder is going to be. It could be bottomed out already. Maybe we come in a little bit lower, but we were getting a little bit concerned as we were watching the bearish Gareth Salway man bun pattern start to form on the chart. We saw the head, we saw the man bun on the Gareth Salway man bun pattern. This can be clearly seen from this picture. And we were saying, you know, we could get a drop down. Now, as we're getting a drop down, what do we see forming on the chart? A razor. A razor. Now, here's the thing. The man bun could be bearish because when you take the bun out of the man bun, the hair flows down, and you never know how much hair is actually going to be in there. It could be just a little man bun that you have with just a little hair, but you can't tell because you can make it look big these days with AI, right? Well, on the way down, we see the razor pattern forming. And then, boom, Gareth Salway shaves the man bun right at these lows, right at the level where Jason Casper's long hair level is. All right, can you believe that? Right? Shaves the dang man bun with the razor right to the level, right to the trade setup that we gave in the Casper Crew VIP Discord. Right? And we are starting to get a little bit of a bounce from this area. Now, when we came down to the area, again, when we take a look at market Cipher, what did we see on the chart? We saw very, very bullish money flow getting higher, momentum waves getting higher. Now, in all seriousness, because this is the most serious channel you will ever see on YouTube, the reason why we got a bounce from this area is because we did something called a liquidity grab. This is a scenario that we were talking about on Monday's live stream. If you remember, we were talking about the fact that when you have an ascending triangle forming, the whales, the market makers, if somebody wants to push the price to the upside, they need a lot of sellers, right? Because if I want to buy a lot of something, I can only buy if there's people willing to sell a lot of it to me, right? I could want to buy 1 million photographs of myself. Paintings, should I say, 1 million paintings of Jason Casper done in pastel paint. But if there's no one selling those pictures, I can't buy it. It doesn't matter how much money I have. Well, here's the thing. When people are longing, they put their stop losses underneath these lows. They think, well, we're going to push to the upside. The triangle's going to break to the upside. As long as we don't take out these lows here, I'm all good. Well, guess what? When they get stopped out, that is a sell order. A long trade getting stopped out is a sell order, which means if I'm a whale, which I am not, okay, but I'm going to draw a picture of one with the spout, the blowing out all the water. The whale now can buy because there's a lot of sellers down here. It's called a liquidity grab, also known as a chickens drinking water pattern. Some people call it a swing failure pattern. I don't know of anybody who calls it a swing failure pattern. Everybody calls it a chickens drinking water pattern. Because if you ever seen a chicken drink water, she takes her beak, she dips it down right below that level, and then laps it up real quick. And that's exactly what has happened down here. And we are now coming back to the POC of the range. Now, this is very important. Because if we just zoom out, look at this objectively here, let's clear off some of the noise. All right. When we take a look from the high to the low, we are coming right now to a very key area, which is this, the Fibonacci golden pocket retrace. All right. This is going to be very, very key. We must reclaim this Fibonacci golden pocket because the 618 Fibonacci, 618, all right. Actually, the 618 is 6 Juanita, that same girl who always rejects me from high school. 6 Juanita Fibonacci level, rejecting me. We could see a rejection from here. This is key. Make it or break it right now. All right. Let's take a look at all our time frames here and determine what is probable to happen here. Because in 10 minutes, Jerome Powell, again, he will come out of his closet. He will make a decision about the money, right? Whether or not the Federal Reserve is going to loosen or tighten, right? If they loosen, if they tighten, loosen or tighten, it's like turning on the faucet outside, coming from the closet. Now, if he says, inflation's down, he comes out dovish like a dove, flying all soft like a dove out of that closet, well, we might actually see the Bitcoin price, bang! I mean, look at this morning when inflation came out in one candle. We got a 2% move over the course of like 5 minutes. So let's see what he's going to say. Then he's going to come out again from the closet and start flapping his gums in about 40 minutes. And he's going to say whether or not he's dovish or hawkish. And I really think this is going to determine the future of Bitcoin for the next week or so. I am still in the camp that it's just more probable that we go for the highs than not. All right, I'm still in that camp. I can't say for certain if it's going to happen. I just feel like it's more probable because we've gone for the lows of the range. Now, overall, what am I looking at on this? I don't really know. I don't really care. I just feel like revisiting these highs right now is likely. That's why I've been holding the dang long trades. That's, been holding these long trades, been holding these long trades now for a long time, right? Keeping the longs long, baby. Make sure to smash up the likes because look, if we can get 1,000 likes in the first half hour, we are going to be giving away 1,000 United States Tether, United States dollar Tether, which is what we all want. We want more crypto tethered to fiat. That's what we love. That's what we need. That's what we thrive on. Major shout out to the super chats in the house. Caffeine injected. God bless you, caffeine injected. Thank you so much for being here. Okay. So look, we got about 9 minutes until the big break, the big news pops out. All right, who we got in the chat? We got, shout out to Crypto Coons, shout out to Andy from Bitcoin Census. My man, guys, make sure to go subscribe to Andy from Bitcoin Census, one of the best traders and analysts out there in the YouTube space right now. You are doing yourself a disservice if you are not subscribed to him, all right? Hundrek says there's no way that this keeps going. Well, let's see what happens. We're at the golden pocket. We're going to get some volatility coming on in here when the CPI comes out. All right, Jasmine's pumping like a wild woman in distress. Shout out to Jasmine. Shout out to Jesse Ray. There's too much ketchup on that hot dog. All right, shout out to Design Aspects. He says, give us a free setup today. Well, we'll see what happens, all right? We'll see what happens, my man. We'll see what happens. Shout out to the Video Kingdom. Got to get 6 Juanita on that live and see what her problem is. Maybe 6 Juanita will call us in today, all right? Shout out to the guy from Texas. He says, pump it up. That's right, baby. We're going to pump the Bitcoin price with the plunger. We take it. We plunge the price to the upside with our Pikachu hat. That's how we roll. That's how we do it, all right? That's how. What time does the Fed decision release? In 7 minutes, guys. 7-minute countdown. Shout out to Divine Hood in the chat. Once again, shout out to Hamid bin Hanif, who says hi. Shout out to Gazgano. What is going on, Gazgano? Shout out to Diego. He says, first rate cut coming today. It's confirmed. Is that confirmed? Can you imagine if the Fed cut rates today, guys? Can you imagine if the Fed cut rates today? That would be nuts. That would be nuts. All right, so look, let's take a look over here at, we're going to take a look at Forex Factory. 6 minutes and 11 seconds of the countdown, the biggest countdown of our lives. 6 minutes and 11 seconds. Okay. Why did I enter at 66, 168? What info did you go on? The simple info that we went on, guys, was this level right here. All right. Look for a long at 66, 115, baby. All right. We were looking to long this level. The information was right here on Market Cipher B, the best indicator in the world that you could possibly use on TradingView. I don't care what anyone else says. All you stupid TA snobs out there, you TA elitists. All right, you go ahead, you use your other stuff. All right, I just look at the nice uneven butt cheeks on Market Cipher. That's all I need, baby. Uneven butt cheeks, the money flow getting higher as we tap right into the level that says look for a long here with bullish divergences. Right? Look at that. The uneven cheekage, the money flow getting higher. So beautiful. I mean, that is so beautiful. And look, that's the thing though, you gotta wait for your levels. But this was a key level right here, man. Wait for your level. Wait for your level to be tapped. You tap right into the level. Bam, baby. Bam. All right. Okay, yeah, so let's see. We're coming over to Forex Factory, right? 4 minutes and 45 seconds. It looks like people don't think he's gonna do a dang thing, right? People think he's gonna keep rates the same, right? JP gonna keep rates the same. All right, shout out to Splashfire Films. Shout out to David. He says my bra is nice. Thank you, David. It does keep the keeps the cleavage in line, baby. Yeah, pump it up, baby. We're gonna pump the Bitcoin straight to 100K today. When Jerome Powell comes out the dang gate, flapping the gums out the closet, baby. Here we go. All right. Jay needs more chickens. I do need a few more chickens, all right? The pump song, we might have to sing it today. All right. Fibonacci over everything. That's so true, man. Fibs are juicy. I love them. Shout out to AZTV. All right. Shout out to AZTV. So if they cut rates, guys, if they cut rates, this thing is going to go straight parabolic mode. All right. If Jerome Powell, he cuts rates not with a knife, but with a dang plunger, just pumping that Bitcoin straight to 100K, baby. Do you smell that? Smells dirty, baby. Because the Federal Reserve is one of the most dirty organizations. Ain't nothing federal about them. And they're not even a reserve. All right? They're just a whole bunch of scammers out there coming out the closet, flapping the dang gums. Shout out to... Is Crypto Face in the house right now? Shout out to Crypto Face. He's long, baby. Crypto Face is long. We're all long, baby. All right? We are all long, baby. Crypto Face, man, I'm on the treadmill to try and keep my heart from dying here. You know, just keeping the walking going. You know? Okay. Okay. Oh, all right. Okay. Here we go. So, look. This is just hypothetical. We're at the 6 Juanita level. All right, we came down to the juicy long level. Market Cipher B gave the go-ahead. Look, I want to give one more thing here. I want to say one more thing. Smoking the hopium, all right? We're going to take one puff of hopium. We're waiting. We got 2 minutes, all right? 2 minutes. That's plenty of time to take a puff of hopium. It's harsh. Oof. But coughing actually helps the hopium get into the bloodstream faster, which makes it better. Now, here's the thing. It's opium. It's harsh. Look, if we take the thing from the low to the low, and we take it also from here to here, this is technically speaking a hidden bullish divergence on the 4 hour. With the money flow getting thicker, it's a stretch. It's a stretch, guys. All right, it's a stretch, but that's why we're smoking the hopium here, all right? Because you know what the hopium does, right? Gives you a whole bunch of good ideas, but then you just sit on the couch and then go to Taco Bell. You don't actually make the profits smoking the hopium, all right? The devil's lettuce is not going to make you productive in your trading, okay? But look, the hot girl, what is it, hot girl? Rejection something? I don't know. Okay, we are waiting for this 1 minute and 13 seconds until the news comes out. Okay, 1 minute until the news comes out, guys. Why no shout out to Keck and Wolf? Because I don't even know who that is, Dermish. But there, I just shouted him out. Shout out to Deck and Herc. Shout out to CryptoFace. He believes in a rate cut today. Let's get it. All right, yo. Yo. Let's do it. Let's do it. I'm down for the cut. All right, I'm trying to get cut myself right now. That's why I'm on the treadmill. We're trying to cut those rates, baby. Caloric deficit on the interest rates. 500 calorie a day deficit, baby. Slow and steady. All right, slow and steady to get stage ready. Bitcoin pumping like her name is Betty. Janet Yellen running through the wilderness with a laundry basket on her head looking like, well, she has some bearish divergences on the face, guys. But we can ignore the divergences because, well, yeah, she's a treasurer, but she has no money. So I don't know how that works. So that we ignore the bearish divergences. Here we go, baby. 10, 9, 8, 7, 6, 5, 4, 3. Woo! My heart's palpitating. 2, 1. Oh, pending. Come on. What are the rates? 5.5. No change, baby. No cuts. Jerome Powell, what are you doing coming out the closet with no dang cuts? You fool! That fool! What does he know about being the Federal Reserve Board of Chairs? Oh no! And now the Bitcoin's taking a massive dump. Ah! Okay, woo! The volatility's popping in. Here's what we gotta do right now, guys. We gotta stay on our feet. We gotta put on our thinking caps. And we gotta pull our dang fib. Oh, alright, pull the fib from... Alright, so here's the deal, guys. We are gonna... We know we had a fast move up. We could get a fast move down. So we're gonna go ahead, draw a box right here. This box must hold. Alright, this box must hold right now. Let's get back to the chart. And let's see what we got here, okay? Let's put on our VWAPs. We bounced right from the VWAP, guys. Look at this. We came down. We hit right into that VWAP. Do you guys see the VWAP? I'm going to make it a little bit thicker. All right, I'm going to make it a little bit thicker so we can see it. Okay, we're bouncing from the VWAP, baby. This is first level that we need to hold. First, if we can hold the VWAP, let's see. Okay, unfortunately, man, Jerome Powell... Jerome Powell. Oh my goodness. Jerome Powell. He's making a scowl. Jerome Powell. Oh, I was about to drop a verse and the beat just ends out of nowhere. Well, that's a bummer. Okay, look, if we hold this VWAP, guys, we very well may see a move to the upside. This is very important. Potential bullish div on the 1 minute here. Potential bullish div on the 2 minute. Actually looking pretty good. Let's see. We got the volatility coming in, baby. Yeah. Jerome Powell, he's making a scowl. I'm sweating so hard, better grab a towel, cause now we're coming down to the fresh VWAP. Bitcoin drops, then it pumps like she just won't stop. Coming down to the low of the range, taking a long trade to make some change. But if we lose the golden pocket, then Bitcoin will drop down. Can you spot it? Oh no, I'm getting kinda scared. About to take a pee in my new underwear, cause the price is going down, it's going somewhere. I hope that we hold so I don't get scared. Yeah, we're coming back to support. Don't be a bear, you're about to get whore. We got 2 purple candles with a fresh wick. Looks like the Bitcoin is about to pick back up. Now let's look at the Dixie. Bitcoin, she's playing her trickies. Yeah, let's look at the dollar. Oh no, she's breaking out, going straight to the squalor. If the dollar keeps pumping, you know that means Bitcoin will be dumping. But hopefully we can hold the support. Bitcoin, please don't do it. You're gonna give me a... All right, okay. So look, we got the candles, baby. We got the candles, baby. All right. But here's the thing. Let's see. We do have some potential bullish div here on these low time frames. I'm gonna go to the 12 minute here. It's real. Oh, man, we're dancing on the line right here. Let's see what happened with the order flow. Oh my goodness gracious. People bought the dip. People bought the dang dip. Would you look at this massive amount of people who longed that dip? People were ready and waiting to long that dip. We got 3.4 million longs. I mean, wow, in this candle. Man, if we lose the VWAP, guys, we are going straight down. Look at this one candle of open interest just bursting through the seams. Okay? Bursting through the seams. Now, we know that we were at the Fibonacci golden pocket, right? We know this is the level that we need to break above it. The hot girl who always rejects the 618 Fibonacci. We know what happened last time. All right, in all seriousness, guys, here's the deal. Here's the real deal. All right, I'm going to give it to you straight. All right, coming out the closet, about to give it to you straight before Jerome Powell comes out of his closet to give it to us. Look, we're going to pull our fib from low to high. All right. I'd say, really, what's most important for me, guys, is this. I don't want to lose this level right here, 67.525. That's the most important thing for me. I'm going to hold this long trade here. This white box, we cannot lose it. If we come to this level, I think we can get a bounce. I'll tell you why. Look, whenever you form a nice bottom like this, where you got bullish divergences, even on the 1 hour like this, like we do right here on the 1 hour, okay? You see this? We got the nice uneven butt cheek pattern on the 1 hour, juicy left cheek, skinny right cheek. Usually, when that happens, most of the time, when you come back down to the golden pocket zone, you're going to get a bounce, especially when that money flow is getting higher like this. So let's wait and see, guys. I'm feeling a little nervous. My palms are sweaty, my knees are weak, my arms are heavy. So now we got to wait, because within the press conference, guys, 2:30 p.m. my time. So we're talking in like 24 minutes. In 24 minutes, we are going to see Jerome Powell come out. He's going to make some statements. The statements are going to tell us if he's bullish or bearish, hawkish or dovish, whatever animal he decides to be this day. All right? All right, Javina says, everyone who longed the VWAP is about to get wrecked. Oh my goodness. I hope not. I hope not, Divine Hood. All right? I hope not. That is a crazy long. Divine Hood says there won't be rate cuts until September. Who knows, man? Maybe they'll never cut rates. Maybe they will never cut rates. I mean, who knows? Who knows? Maybe they're going to have to raise rates again. Who even knows? Oh, man, that was crazy. I can't believe this move that's happened. I mean, let's go to the 1 minute chart here. Can you guys believe it? In 1 minute, the Bitcoin price dumps 1.5%. That's insane. To put that in perspective, this morning with the pump, with the news, we pumped in 1 minute 1.9%. So I said we dumped almost as much as we pumped. And excuse me, here's what's happening right now. Oh man, this is not looking good. This is not looking good. Yeah, we basically did take a little bit of this liquidity down here. All right, let's pop it on our chart here. Yeah, we took that wick. Oof. All right. Uh-oh, looks like the Divine Hood prediction's about to come true. Bitcoin, she's about to dump and take a poo. Wow, longs are doubling down, guys. We got a few shorts opening actually here, but we can see. No, actually, no, we don't have shorts opening. We have shorts closing still, but longs are still opening, man. Longs are still opening here. This is very intense. Let's zoom in and see, like, what are people doing in the moment? All right, we had a few shorts open here, but in general, man, look at these longs right here. Wow, somebody got a little excited too early there. And now we got more longs coming in here. We got even more longs coming in here. It's a fight. Excuse me, that hopium, guys. The hopium really did hurt my throat. Okay? Shout out to everybody in the chat. Make sure to smash the likes. We got 17,000 people in here, only 500 likes. Guys, let's see if we cannot get 1,000 likes within the next 10 minutes to give a $1,000 giveaway. I'm ready to give it away. I'm going to set a timer for 10 minutes. And if we can get 1,000 likes in 10 minutes, we're giving away $1,000. All right. No more dump, please, says Conquer R. Biddy is dead, says the Dusty Hunt. They might know something. The longers might know something, says FitGenius618. Trader Geo wants to short it. Trader Geo! Bro, why you so short, bro? I don't mean any disrespect. Why you always trying to short my Bitcoin? All right, shout out to Trader Geo. Make sure to go subscribe to Trader Geo as well. Okay, because the dude's the man. Okay. All right, let's get back to Market Cipher here. Let's look at Market Cipher. No need to when in doubt. When in doubt, let's find some reasons to stay bullish. Okay, we'll start in the daily. Bearish divergence. Oh no, that's not bullish. That's bearish. All right, 4-hour time frame. Bearish divergence at this high and a lower low into the golden pocket. Oh my, Jason, you idiot! With the bull goggles. All right, let's go down lower and try and get bullish. We just took another puff of hopium. All right, let's see. Come on, Jerome Powell, screwing us over, no rate cuts. All right, here's what's keeping me in, guys. We had some nice bull divs down here. All right, 1 hour time frame, some nice bull divs. Money flow crossing to the upside. A nice pump. We would expect fast move up, fast move down. We would expect that. All right, so this is our clear support resistance floppity flip. All right, like it just goes back to our initial analysis. This white box must hold. All right, the white box must hold. All right, I better change the box to a different color here. Let's make it yellow. The yellow box must hold, guys. All right, here we go, baby. Come on, Bitcoin, must hold, must hold. We're keeping it going. When in doubt, market cipher it out. That's right, baby. When in doubt, market cipher it out. All right. All right, XYNVX is also on the Hopium. MX Bank looking for a short. You're looking for a short. Oh my goodness. You guys and your shorts. You silly people. I'm just kidding. Like, I don't think it's a bad idea to be looking for a short either, all right? Okay. All right. DXY is about to pump again. Jerome screwing us as usual. Yellen box must hold. Yeah, the Janet Yellen box. We're going to make the box Yellen. We need 1,000 likes. Yeah, we need 1,000 likes, guys. Let's go. All right. Only up from here says preparing for war. Come on, baby. Come on, preparing for war. Here we go, baby. I mean, look, we did bounce from VWAP. We bounced perfectly from that VWAP, man. Look at this bounce from the VWAP. Where's our VWAP? Hang on, we gotta pop on the WAP, baby. Ooh. Yeah, that's nice. That is a nice bounce from VWAP so far. And look, the 2 minute, come on 2 minute. Give us a green dot, baby. How's the 3 minute looking? Look at this. I mean, look, am I the only one that sees this? Am I the only one that sees this? You guys see this? You guys see that? I might be smoking the hopium. I'll be honest with you. I have been hopefully bullish for a long time. But I'm seeing some bull divs forming here. Let's go to our 6 minute. Oof. Oof, baby. That's what I like to see. You know, money flow looks like Garbaggio, but we never got bearish divs at the high. Come on, baby. All we need is Jerome Powell to come out that closet, flapping the gums, telling us something sweet that we need to hear, baby. You know, inflation's down. We're super close to 2% inflation. What he's gonna say. He's gonna say we used to be hawkish, but now we're feeling dovish. We used to be hawkish, but now we're feeling dovish. All right, a 10-minute CDW, baby. We got a 10-minute CDW, baby. All right. Let's go to the 10-minute chart. Shout out to Trader Geo. Pick a custom time frame. ByBit doesn't have a custom time frame 10-minute. Okay, we'll go back to TradingView. Let's go to our 10-minute chart. Wow, would you look at that? We have a 10-minute candle close above the lows of this range here. Bouncing from the VWAP. Come on, baby. Come on, Bitcoin. The 10-minute, I'll be honest with you, the 10-minute doesn't look too great. But go down to the 6-minute. It looks like it could give us a little something, something. Bounce from the VWAP, 10-minute CDW. Come on, baby. All right, let's go back to the chart here. Oh, man, longs are coming in. I don't like the look. I don't like the look of these longs coming in here. I hope they know something I don't know. I hope they know something I don't know. Uh-oh, I don't want the 1 month chart. Let's go back to our 15-minute chart. I don't even know how to use an exchange, guys. This is not financial advice, and I'm not a financial advisor. This is not financial advice, and I'm not a financial advisor. All right, we're so close to 1,000 likes. All right. Let's see. Oh, shout out to Anthony T. My man. All right, Crazy Waffles, 5150 will laugh if the shorts get destroyed. I would also think that would be quite funny. But I'm not here to laugh at the shorts getting destroyed. Okay. Here we go. Shout out to Dome Life. Shout out to Ines Menace. There's a huge order at 68,500. All right, 68.5. Oh man, that would be crazy, right? A little CDW of that low. That would be pretty crazy. All right, let's take a look at. Shout out to Aaron G with very important. This actually is financial advice. Aaron G is not a financial advisor. Neither am I. But if we were financial advisors, this is legitimate advice. Always manage your risk, guys. Please, in all seriousness, always manage the risk. Shout out to Memory Man. Shout out to Englishy. Guys, just like the live already. We're so close. I don't know if we're going to do it in our 10 minutes. Okay, so we're going to take a look at the dollar right now. Let's take a look at the dollar right now. And, huge shout out to Spartan Trading, by the way. God bless you, bro. Let's take a look at some other assets, okay? We're going to look at our dollar. Oh, look at Bitcoin. Pumping, man. I didn't even notice this. Okay. So, just little context, guys. Look, we came down to the secret Casper crew level. We got a bounce. We came up to the 6 Juanita. Jerome Powell came out the closet. He gave us a little something, something. That scared Bitcoin down to, basically, the VWAP. Now we're getting a bounce. As long as we can hold above this yellow box on the chart, the Janet yellow box, I'd say more upside's possible, given the nice bottom. All right, let's take a look quickly at the dollar again. Okay, the dollar is looking, I'm not going to lie, it's not looking bearish, guys. All right, 6-minute dollar is not looking bearish here. But if we can lose this white line, hold below it, that could be a bit of a move down here. Come on, dollar. Can we dump a little bit lower? I can't wait until JP starts talking. Dollar is bound, it got a bounce from the 786, and yeah, man, the dollar could really squeeze up here if she doesn't stay below this white line. She could see a fast move up. Let's check out the S&P 500. S&P 500 pretty much doing the same thing as what Bitcoin has done. All right, she got to move down, wicked through the VWAP. Now it's back up above the VWAP. Let's check out ETH. Same deal with ETH, guys. Ethereum. She came down, wicked through the daily and weekly VWAPs. And I have to say, like, ETH also looks pretty nice. A pretty nice bottom here. Would you look at the nice uneven butt cheek pattern on ETH? It's absolutely beautiful. Change of market structure, right? We had our high, our low, lower high, lower low. Bam, we make our first higher high. So now I would not be surprised. I will be looking for those higher lows to come in around that Fibonacci golden pocket. Let's check out our lower time frames on ETH. Trigger wave forming, guys. After that nice bottom, we got a trigger wave forming after the nice bottom, the 6-minute, giving us a nice bull div on Ethereum. All right, man, I'm feeling a little bit bullish right now. Shout out to ByBit, by the way, guys. I love being back on ByBit. It gives me good feelings. I actually don't even like ByBit as much as I like MEXC. It just gives me good feelings to be trading back on ByBit. You can only understand that if you were trading on ByBit and then all of a sudden ByBit had to go away for a while there. Shout out to ByBit. All right, this is my third trade, I think, on ByBit. Second or third trade since coming back onto ByBit. Shout out to Mango. Shout out to Crypto Owl. Shout out to Preparing for War. Rates will come down next month. It's highly probable. I hope so. I would like to see Bitcoin make a new high. Jerome is the new Oprah. You get a liquidation. You get a liquidation. Everyone gets a liquidation. LOL. All right, Aaron G says 110 likes needed. Oh man, guys, we're so close. I mean, like, this timer's about to go off. I set a 10-minute timer. Oh, the timers went off. The timer just went off, guys. Oh man, we didn't get the likes. All right, let's set another 10-minute timer and see what happens here. I'm not saying we're gonna do a giveaway. I'm not saying giveaway. We had a chance, but let's just see where we're at in 10 minutes. All right. All right, in 10 minutes, Dylan Waves had a brief run with ByBit, didn't get to know her that well. Well, I got to know her pretty well. All right. DXY is down bad. Well, all right, let's take another look at the dollar here, baby. Bad. But it is printing a 6-minute red dot. You know, it literally looks like the opposite of Bitcoin right now. I mean, if we invert the dollar... Right, if we invert the dollar, invert, it looks the opposite of Bitcoin, guys. Right, they kind of look the same. We had a big pump up, topping out a little bit on the 1 hour. Big pump up, topping out a little on the 1 hour. Upside down dollar looks like Bitcoin. All right, so we need JP to come out. JP, come out. We need you to come out, my friend. Very close, 9 minutes. I'm very excited to hear him talk. All right, let's see. Federal Reserve Live, right? We're gonna Google for it. All right, here we go. Here we go. That's today, baby. 2:30 Eastern Time, baby. That's what we want. That's what we need. All right. While we're waiting, guys, shout out to the sponsors again. Shout out to BLOFIN. All right. Giving a super juicy Jason Casper special until June 26th. Deposit bonuses. All right. Shout out to ByBit. Link in the description. Also, deposit bonuses on ByBit. Shout out to Apex. Funded trader program. Officially partnered with Jason Casper. If you know how to trade, but you need capital, this is a way to go. Shout out to ZOOMEX. All right. ZOOMEX. Sign-up bonuses as well as MEXC, best deal on fees. MEXC is honestly the best deal on fees. You could trade 0 spot fees, up to 1,500 altcoins. All right. So those are all the sponsors of the channel. Plus, we got the Casper Crew VIP Discord if you want to join. Link in the description. Plus, Market Cipher. And I think that's all I got to shill for right now, guys. That's all I got to shill for right now. Okay. CB says 100K in 5 minutes. Shout out to Data PhD, the winner of one of our giveaways. Shout out to Aaron G. Incline press all day. Man, I need to work on my incline press a little bit because my upper chest could use a little work. Yeah, I've always been dealt dominant, guys. I've always been dealt dominant. My upper chest, it's hard for me to work, all right? I'll be honest with you guys. All right, here we go, baby. How am I finding BLOFIN? I don't mind Aaron G. It's good if you can't KYC. But nothing's gonna replace MEXC for me, bro. I'll be honest with you. All right, but it is a good option. BLOFIN, they have a really good team behind them. They really do. But Look, it's tough to part ways with exchanges. It really is. It was really hard for me to leave ByBit. It took me a long time to feel comfortable on MEXC. You know, I'm in a weird place right now. You know, I hate KYCing. So, but don't worry, guys, because there's something coming that's going to solve all our problems. More information on that will be coming soon, all right? Is Tren organic? Well, it depends. There is GMO Tren out there. They genetically modify the Tren. But there is organic Tren, and if you use organic Tren, it's all natural. You can still compete in a natural bodybuilding show if you use organic Tren. RIP MEXC. I know! I know. Binance was mangoes. Yeah. I never really traded too much futures on Binance. A little bit. I dabbled with the altcoins because back in the day, ByBit, you could only trade like Bitcoin, ETH, Litecoin, and Ripple, I think, or something. And Binance Futures was where it was at to trade all those during DeFi season in 2019. Shout out to Dylan Waves. Shout out to Splashfire Films. Shout out to It's Geo. Yeah, Tren is not your friend, by the way, guys. Don't ever do Tren. All right, I've never done Tren. I never will. I've never done any kind of performance-enhancing drug except caffeine and creatine. And what else have I done? I think that's about it. Are those drugs? Everything's a drug. Everything's a drug. All right? Everything technically is a drug. Tren hard, eat clean, Anavar give up, says Splashfire Films. Any advice for golfer's elbow? The only advice I have is advice you don't want to hear, my friend. You got to take it easy. You got to rest it up. Don't eat foods that are not going to make you inflamed. Figure out what that is for you. Avoid movements that are going to aggravate it. I know it sucks, but sometimes you're going to have to not work out certain exercises for a long time until that gets better. That's really the only way. I've had it before. Something to avoid it is you got to switch up the movement that you're doing. If you're doing regular pull-ups, overhand grip, regular pull-ups, every time you do pull-ups, eventually you're going to get overuse injuries if your form's not 100% perfect. If you're always doing flat barbell bench press, switch it up, use the dumbbells, you know, switch the grips, switch the movement, same movement pattern, but different variation. That's the only way to avoid getting that kind of stuff. In my experience, what do I know? This ain't no financial advice, baby. All right, 4 minutes until. All right, shout out to Crypto Naughty. He does creatine suppositories. You know, someone asked me if I wanted to do that, and I said, well, depends. All right, the dollar's starting to get a move back to the upside. How's the Bitcoin? Come on, Bitcoin. Come on, Bitcoin. Come on. Let's check out the order flow again. Oh, no. The longs have decided to close out. A lot of the longs have decided to close out. Maybe about a third of them are now closed. All right, waiting for Jerome Powell. Any second now, he's going to start popping, start pumping. All right. Shout out to Preparing for War. You're coming out of retirement to fight? To fight? What do you mean? Like, are you a boxer? An MMA fighter? Going to war? What kind of fight, man? Can I say a prayer for you? Well, may the Lord bless you in Yeshua's name in everything that you are going to do. And may he give you wisdom and guidance. Oh, man. Oh, no. Come on, Jerome Powell. I can't wait for Jerome Powell to start talking. That's what I need right now. We need a change. We need change. All right, we need some change right up in here. Oh, kickboxing. All right, preparing for war. All right. May the Lord give you strength. What if you gamble and decide to 50x short, 50x long your whole portfolio? If you get it right, you never have to work again. Well, it's all about the risk versus reward. I mean, You got to weigh that out, my man. I recommend against it. But, you know, there have been times in my life where I made similar decisions. I can't say I did it with 50x leverage. I did it on spot. But look, it sounds like a really foolish idea to me. It sounds like a really foolish idea. Do zines boost your testosterone? I don't know what a zine is. I'll tell you what really does boost your testosterone. What really does juice your testosterone is sleeping, eating good foods that don't come in a package, getting plenty of sunshine outside, and just trying to minimize stress as much as possible. All right. That blue candle was suspicious, says Jamie. All right. It doesn't usually dump when he walks up. I don't know. We got 1 minute. All right. Shout out to Zani. Why you lying, dude? When you take juice 100%, it's obvious. I'll give anything if you don't juice. I don't know why you lie to people. Ouch, bro. I take it as a compliment, though. I really take it as a compliment, my man. And I appreciate that. I'm going for the juicy look, baby. All right, let's see. Check it out. Dang it, we still don't have 1,000 likes. All right, just in time for JP. All right. Oh yeah, that's true. Pine, they say increases testosterone. And sprinting, yeah, lifting heavy weights. Heavy weight, that's the way to do it. All right, uneven butt cheeks will boost your T. All right, let's go. Time for JP. Let's mute the music here. All right, let's mute the music. Let's come over. I'm very excited. Here he comes, guys. Here he comes.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy has made considerable progress toward both goals over the past 2 years. The labor market has come into better balance, with continued strong job gains and a low unemployment rate. Inflation has eased substantially from a peak of 7% to 2.7%.
Oh, baby.
But is still too high.
Oh.
We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.3% in the first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, grew at 2.8% in the first quarter, nearly as strong as the second half of 2023. Growth of consumer spending has slowed from last year's robust pace, but remains solid. And investment in equipment and intangibles has picked up from its anemic pace last year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2.0% over the next 2 years. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 218,000 jobs per month in April and May, a pace that is still strong, but a bit below that seen in the first quarter. The unemployment rate ticked up, but remains low at 4%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market have returned to about where they stood on the eve of the pandemic, relatively tight but not overheated. FOMC participants expect labor market strength to continue. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.2% at the end of next year. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in April. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The Consumer Price Index, which came out this morning and tends to run higher than the PCE price index, rose 3.3% over the 12 months ending in May, and the core CPI rose 3.4%. The inflation data received earlier this year were higher than expected, though more recent monthly readings have eased somewhat. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.6% this year, 2.3% next year, and 2.0% in 2026. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As labor market tightness has eased and inflation has declined over the past year, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. The most recent inflation readings have been more favorable than earlier in the year, however, and there has been modest further progress toward our inflation objective. We'll need to see more good data to bolster our confidence that inflation is moving sustainably toward 2%.
Man, we dumping, baby. I don't want to see this.
That reducing policy restraint too soon or too much could result in a reversal of the progress that we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.1% at the end of 2025, and 3.1% at the end of 2026. But these projections are not a committee plan or any kind of a decision. As the economy evolves, assessments of the appropriate policy path will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we're prepared to maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly, or if inflation were to fall more quickly than anticipated, we're prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We'll continue to make our decisions meeting by meeting, based on the totality of the data and its implications for the outlook and the balance of risks. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in
Sorry, I forgot to give the sign language.
We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
What kind of old laptop does he got there? It's like a 1997 HP.
Steve Leisman, CNBC. Just wondering if you could walk me through the committee's average inflation forecast. Core PCE is now forecast to be 2.8% by the year end. It's already 2.75, and after today's number, there were several forecasts on the street that it would be 2.6 at the end of this month. Does that tell you that the average official expects no further progress in inflation, and in fact that it's going to get worse? And if you have this wrong, doesn't it mean that you could have wrong the outlook for rates there?
Yeah, so what's going on there is that we had very low readings in the second half of last year, June through December, really. And we're now lapping those. So as you go through the 12-month window, a very low reading drops out and a new reading comes in. The new reading gets added to the 12-month window. So it's just a slight element of conservatism that we're assuming a certain level of incoming monthly PCE and core PCE numbers. We're assuming, a good but not great numbers. And if you put that on top of where we are now, you get a very slight increase in the 12-month reading. Now, do we have high confidence that that's right? No, it's just a kind of conservative way for forecasting things. If we were to get more readings like today's reading, then of course that wouldn't be the case. So it's just a forecasting device. I think. Let me say that we welcome today's reading and hope for more like that.
But if it comes in, just to follow up, it comes in the way you forecast it, it would seem strange for you to be cutting rates at all in context of a rising core PCE. Thank you.
Yeah, no, I mean, I think what we said is that we don't think it'll be appropriate to reduce rates and begin to loosen policy until we have more confidence that inflation is moving back down to 2% on a sustainable basis. And that's the test we've applied. I don't know that this rules that in or out. I mean, really, it's a forecast, a fairly conservative forecast, month by month, that would lead to slightly higher 12 months rates by the end of the year. If we get, better ratings than that, then you will see that come down or remain the same. If you're at 2.6, 2.7, that's a really good place to be.
Nick Tamarosa of the Wall Street Journal. Chair Powell, if I look at the rate projections, I see 15 of the 19 that are anticipating either one or two cuts this year, fairly evenly split between the two. And so I wonder if you could explain a little bit more the nuances or the differences there. Would 2 or 3 more inflation readings, like the one that we saw this morning, make a September interest rate cut possible?
So as far as the SEP part of that is concerned, as you know, I talk to all of the other participants on the FOMC every cycle, and we talk about their summary of economic projections and the their dot plot and everything. And what I hear and see is that people are looking at a range of plausible outcomes, and in many cases they're thinking, I can't really distinguish between two of these. They're so close for me. These are very close calls. But we ask them to write down the most likely one, so they do. And I think as you've said, there's 15 of the 19 are kind of clustered around 1 or 2. So I think I would look at all. I look at all of them as plausible. But I look at I think that does tell you kind of what the committee thinks. But what everyone agrees on is it's going to be data dependent. No one brings to this or takes away from it, that is on the committee, a really strong commitment to a particular rate path. It's actually just their forecast, and it's a combination of their forecast and their own reaction function. But again, everyone would say that this is very data dependent, and I don't hold it with high confidence. And I think if you're looking for and don't really think that they're not trying to send a strong signal that this is what I think is the right thing. It's just what they think at a given moment in time, subject to data. In terms of future meetings, we haven't, we don't make decisions about future meetings until we get there. I think in terms of what we need to see, I mentioned it earlier. We want to gain further confidence. Certainly, more good inflation readings will help with that. I'm not going to be specific about how many because, really it's going to be not just the inflation readings, it's going to be the totality of the data. What's happening in the labor market, what's happening with the balance of risks, what's happening with the forecast, what's happening with growth. You look at all of that and you ask, are we confident? Have we reached an appropriate level of confidence that inflation is moving down sustainably to 2%? Or alternatively, do we see really unexpected signs of weakness in the labor market that would call for a response? Which is another thing that could happen. But again, we don't see that, and we see today's report as progress and as building confidence. But we don't see ourselves as having the confidence that would warrant beginning to loosen policy at this time.
And if I could quickly follow up, did you or any of your colleagues change your interest rate projections after 8:30 or whenever you got the inflation numbers today?
So this happens too often, but it does happen. It just is, data came, I think it happened a few meetings ago. So when that happens, when there's an important data print during the meeting, first day or second day, what we do is we make sure people remember that they have the ability to update. We tell them how to do that, and some people do, some people don't. Most people don't. And I'm not going to get into the specifics, but you have the ability to do that so that what's in the SEP actually does reflect the data that we got today to the extent you can reflect it in one day. I think we'll see PPI tomorrow. We'll know more about the PCE reading as the month goes on. But
man, he doesn't sound very confident with anything, man.
To PCE, we did have this morning. We were briefed about it. And people were able to consider.
He's saying nothing. He's saying nothing. He's saying nothing.
Some people generally do, but most people generally don't.
John Allen.
Hi, Chair Powell, Janelle Marte from Bloomberg. As you noted, the labor market is now in many ways back to where it was before the pandemic. I wondered if you could comment on how officials are viewing that. So do you think that there still needs to be more cooling in the labor market to bring inflation all the way down to 2%? Or is there any sense that maybe the labor market is more vulnerable now to higher rates now that many of those imbalances have eased?
Sure. So by so many measures, the labor market was kind of overheated 2 years ago, and we've seen it gradually move back into much better balance between supply and demand. So what have we seen? We've seen labor force supply come up quite a bit through immigration and through recovering participation. That's ongoing mostly now through the immigration channel, but still we've had some increases in prime age labor force. In terms of on the demand side, we've seen quits moving down. We've seen job openings moving down. We've seen wage increases moving from very, very high levels a couple of years ago back down to more sustainable levels. We have seen unemployment creep up now 0.6 over the course of a year or so, very, very gradually.
This doesn't look bullish, guys, on the order flow. All those longs are now closed out. All the longs have now closed out. So, man.
Creation. You have payroll jobs still coming in strong, even though there's an argument that they may be a bit overstated, but still they're strong. So that's what we see. We watch the labor market, of course, and the economy as a whole, but the labor market very carefully, and that's what we see. We see gradual cooling, gradual moving toward better balance. We're monitoring it carefully for signs of something more than that, but we really don't see that.
As a quick follow-up, the surveys that make up the jobs report are showing different tales. There's been some divergence, especially we saw in the last report that we got on Friday. So how do you interpret that, and how does it change your view on the labor market?
So sometimes you can't reconcile the differences. You just have to look at it and try to understand. And that's why it always makes sense to look at a series, in 3, 6, and 12 months of things rather than just one report. But you're right to point to the last report where there were job losses in the household survey, job gains, big job gains in the establishment survey. So, we're left with ambiguous results, and we have to deal with that uncertainty around data. Nonetheless, the overall picture is one of a strong and gradually cooling, gradually rebalancing labor market. Job openings, while they've come way down, are still, greater than the number of unemployed people. The jobs workers gap is still a significantly positive number, greater than it was before the pandemic. So overall, we're looking at what is still a very strong labor market, but not the superheated labor market of 2 years ago, or even 1 year ago.
Thanks, Chair Powell. Neil Irwin with Axios. Back on the rates path, the SEP showed quite a large shift of rate cut expectations relative to March. That's a period in which the economic data flow hasn't been that dramatic a shift. Can you provide some color on what changed in attitudes on the committee over the last 3 months to see a much shallower path of rate cuts this year?
Yeah, the big thing that changed was the inflation forecast. So the inflation forecast moved up several tenths for the end of the year. And as I mentioned earlier in the, what did we take away from this? We had really good inflation data in the second half of last year, then kind of a pause in progress in the first quarter. And what we took away from that was that it's probably going to take longer to get the confidence that we need to begin to loosen policy. So the sense of that is that rate cuts that might have taken place this year take place next year. There are fewer rate cuts in the median this year, but there's one more next year. So if you look at year-end 2025 and 26, you're almost exactly where you would have been. Just it's moved later because of that progress. Now you get different data today. So we'll have to see where the data light the way. The economy has repeatedly surprised forecasters in both directions, and today was certainly a better inflation report than almost anybody expected. And we'll just have to see what the incoming data flow brings and how that affects the outlook and the balance of risks.
Gina. Gina Smiley, New York Times. Thanks for taking our questions. In the summary of economic projections, the long-run interest rate forecast moved up a bit. I wonder if we should read that as a sign that you think that policy is not sort of as restrictive as we previously expected. How should we interpret what that means about how the committee views its current policy setting?
So two things about that. One is this. You're right, it did move up, but I want to remember to point out that long-run neutral rate of interest is a long-run concept. It really is a theoretical concept, can't be directly observed, and what it is the interest rate that would hold the economy at equilibrium, maximum employment, and price stability, potentially years in the future where there are no shocks. So it's a little bit, it's not something we observe today. Today we've got a very specific economy with all kinds of shocks we're still getting over from the pandemic. So it's, I don't think that the concept of R-star, it's a very important concept in economics and in what we do, but honestly, it doesn't really get you where you need to be to think about what appropriate policy is in the near term. But back to your original question, people have been gradually writing it up because I just think people are coming to the view that rates are less likely to go down to their pre-pandemic levels, which were very low by recent history measures. Now we can't really know that. That's an interesting dispute and discussion to have now. But ultimately, we think that things like the neutral rate are driven by longer-run, slow-moving forces, and there's a really good question have changed, or whether instead rates and the economy are experiencing a series of persistent but ultimately temporary shocks. That's been the debate, and we can't know. But in the meantime, we're making policy with the economy that we have, with the distortions that we have. And I also, to your other point, I think it is the case that as time has gone by, the question of how restrictive is policy has become one that everyone's asking, and we're asking it too. And my answer has been that policy is restrictive. The question of whether it's sufficiently restrictive is going to be one we know over time. But I think for the reasons I talked about at the last press conference and other places, I think the evidence is pretty clear that policy is restrictive and is having the effects that we would hope for.
Well, thanks, Chair Powell. Howard Schneider with Reuters. Just to carry that a little further, should we read this as a conclusion that the combination of tipping to one cut this year and acknowledging further progress on inflation as kind of a mark to market on the level of restrictiveness that you need, that you in fact have concluded that you weren't quite there yet?
I'd be reluctant to try to draw that conclusion. I think this is about, looking at the incoming data and asking how much progress are we making on inflation and how is the rest of the economy doing? Is the labor market still strong? That's what we're thinking about. You can translate it into the language you're talking about, but to me the focus is more on we have a goal which is price stability, another goal which is maximum employment. How are we doing there? We think we've got a good, strong labor market still. We think we've been making progress toward the price stability goal, and then for a while there was a pause, and we look at today's thing and we think, well, that's a good reading, and we hope we get more like that. And in the meantime, we're asking, is our policy stance about right? And we think yes, it's about right. We're prepared to adjust it as appropriate, but we think we're getting the things that we would want to get, broadly speaking, and that's why we've been at this policy right now for almost a year.
So just to follow up on that, I think one curious thing here is you've got now this restrictive policy in place and virtually no change in any of the major things for all of this year. You've got growth that stays above long-run potential throughout the forecast period, unemployment that never goes above the long-run estimate, right, of 4.2. So this isn't a story of slack improving inflation. So where's the improvement in inflation coming from that it's going to pick up pace so much in 2025?
Well, it's been coming. Where's it been coming from? We'll start with that. Clearly, a lot of some of what we've been getting is just the reversal of the unwinding of the pandemic-related distortions to both supply and demand, and that is complemented by and amplified, supported by restrictive monetary policy. So those two things have been working together. We've also had a very positive supply shock on the labor side, and also you get a positive supply shock when the supply conditions unwind and return to normal. So you've had above trend potential growth and high growth, and yet you've had the benefit of inflation coming down really fast actually last year, and we'll see what the rest of this year brings. So these dynamics can continue as long as they continue. Ultimately, the question is all right,
let's pause on the JP for a second here. All right, let's pause on JP for a second. All right, so guys, this could very easily come down lower here. Bart Simpson pattern, as some have said. Yes, absolutely. This candle in 2 minutes came up 2%. So we could very easily come down into the box. I still am going to hold this long trade, down into the box because there's a good chance we could get a bounce from here. He is not sounding very dovish. He's not sounding like very, very bullish, let's put it that way. The dollar, let's see what happens with the dollar. If she can lose this white line and if Gina can kiss the dollar goodbye back down below this level, well, then we might have some hope there. We might have some hope there. If Jerome Powell's mouth can hold as support, we might have some hope there. But yeah. He's definitely not as bullish as we had hoped. All right, definitely not as bullish as we had hoped for. But yep. LOL. All right. 618, come to save us. 618, come to save. Shout out to House Mix Play. He says, I put you on mute for a second while I was occupied. You started doing sign language and tripped me out. The coin incident, synchronicity. Thank you so much for the $4.99 super chat. I really, really appreciate it. All right, so we're back to the music. I don't really care about what Jerome Powell has to say anymore, guys. I don't even care what Jerome Powell has to say. But look, man, what a letdown. What a letdown. That was kind of a letdown. Was it not, y'all? All right. Well, I think I'm going to call it a stream, guys. It's been a really good one. God bless you all. God bless you all in Jesus' name, even if you're not religious. May the Lord bless you, each and every one of you. Thank you so much for being here. Thank you so much for taking the time. It was a fun stream, but it was a bit of a letdown. All right. We'll be back later this week, guys. Take it easy. Peace.